Hello, everybody, and welcome to Studio Market Mind. You'll have to forgive me, I have a cold at the moment, so pardon my voice. Today we are looking at Vertex Energy, ticker VTNR. So we have the 4-hour chart pulled up going back to May 21. You can see this massive gap up, came up to an all-time high around 18. It's been coming down ever since. It's been in this downward channel here. You can see we have 1, 2, 3, 4, 5 trend lines, all identical, parallel with each other. This is the upper area. This has been the main trend area. You got the main channel, upper tier, and lower tier. See, it came down, back up, came down, hit support, back up into the upper tier, rejected, lost it, down into the lower tier, back to the middle, down, still in the middle, still in the middle here where we hit 330, finally hitting support, finding support at the 330 mark, which is where we find it today. If we go in and look at the daily action, so today you can see we hit a low of 318, which is so close to the $3.16 mark we are looking for to close that gap from the massive spike a couple years ago. Who knows what it's going to do from here? It could be up 10% tomorrow. We are looking for it to come down to the 316 area before moving up. Do not think we see this come down into this wedge or down into this channel below $3. Seeing a lot of gains in energy at the moment. Solars have been catching a bid. See it end phase, sun run. A lot of energy plays have been moving, and this one is due, and it's finally consolidating with potentially moving up. So what is the timeline? Let's go back to the 4-hour chart here. The stock can move extremely quickly. So right now, as of last report, it has 22 or 23% short interest. You can see here, this was January 5th, 23. This is about March 5th, 23. So January and February, 2 months, it went from 556 to 1115, basically doubling. We are looking for that exact same type of move here. We're looking from 330 to the 650 area. We are targeting 650 because of this right here. So these three vertical lines are earnings dates. We have May 9th, we have August 9th, and we have November 7th. All three hurt the stock. This right here is not related to earnings. It is a downgrade from Oppenheimer, I believe. So it does not show on the 4-hour chart, but there's a gap here with the upper portion at 650. 650 needing to be filled, 650 doubling from here, energy moving up. It makes sense for this play. One other thing to consider is looking at oil. Here we have WTI crude oil futures pulled up. This is a daily chart. These wedges are very loosely drawn, but you see we have an ascending wedge here, it broke into this descending wedge, it broke here today with GDP coming in higher than expected. It closed above the support line on the daily with oil trending up, with equities trending down here at some point. The play is very viable. Let's go back and look at the chart. So coming into January, we're going to have CPI December 12th. We have FOMC the 12th and the 13th, which will be right in here. This should start catching a bid now that it's found support. Come into this wedge, break out into clear sky breakout. 650 mark, early March, possibly before. We're talking 2 months. This could be December and January. It could be the end of January, beginning of February. above 650 mark. Let's look at a couple other items with Vertex. So their most recent earnings here. EPS, earnings history, 929 was reported November 7th. Expected 14 cents, came in at 17 cents. Beat on revenue, provided good guidance, had optimistic remarks on their refining process, and some of their processes that had some negative impacts the past few quarters are starting to have an optimistic tone. All good things for this play. So what is the play we are looking at? We are looking at April 19th, 2024, 450 calls. Right now they are 32 cents. We are allocating $10,000 to this play. I'm going to be putting 75% of that in if it hits the $3.16 mark. Why only 75%? Let's go back to the chart here. If we get into January and we have FOMC, we want to see how that affects the markets. We should see equities coming down at the same time energy is going up. If that is not the case and we fall or we come into this wedge or this wedge, theta will slowly be grinding away our premium. So that 2,500 will be set aside in case that happens. If it doesn't happen and the play is working, we may not get to deploy it. That's still a winning trade. Couple other items. So the $7,500 we are looking, 5 at the low end, 650 is our target. 650 in early March is a 550% return. Let's calculate this with our 7,500. $41,000. Okay, on a $7,500 play. Say you only want to put in $500. Call it 640. You're looking at $3,500, 550% return. Not a bad option. So keep an eye on this. If it starts making its move up, this is something that has potential to work out here over the course of the next 2 months. Again, options are risky. Trade at your own risk and only within what you're comfortable with. And good luck, everybody, with your trading.